Alright, it has been a while since I've made a video. For those that have been asking how my trading's been going, I'll get to that at the end of this video. But in this video, I'm going to show you everything that you need to know to get started with ThinkorSwim. Alright, so let's just get into it. For those of you who are brand new to trading, ThinkorSwim is a very popular software for scanning and finding stocks. Now, when you first log into ThinkorSwim and download the software, which there's a link in the description to where to download it, there's a few things that you need to know. First, up here it says partially delayed data. Most live accounts or new accounts will be partially delayed. You have to contact them to make sure that you get real-time data in order to day trade. You can't trade with a 15 or 20 minute delay. Now, next up, when you first get into it, the only two tabs that you really need to learn starting out is scanning and charts. And over here on the left is just the default scans that they have for you. This is an index, and this watch list just seems to be like all the top stocks. It's not really important right now. We'll make our own scanners, and you'll be able to load them into the left side. Let's start off with setting up your charts. So if you click here on the Charts tab, if you type in, let's look at Tesla. If I can spell Tesla right. Alright, so this is a chart for Tesla, and the way you know what the timing is up here. This is your time frame set up, and it's currently set to 1 year and day. So what this means is you're looking at an entire year of the stock, and each bar is 1 day. If we go here to 1 day, 1 minute, it changes, and now you can see this is actually 2 days. It's weird that it says 1 day, but it's actually 2 days. The light gray here is post-market and pre-market trading, and then this is the current day, and each bar is 1 minute. And if you left click and hold and drag, you can actually zoom in to specific points in the trade or in the chart to see it. And then down here at the bottom you have the volume. For day trading, a lot of people like to actually color code the volume bars, and the way you do that is clicking at this chart setting button up here and going over to appearance. Then you can click volume bars, color as ticker symbol, hit apply, and then all your volume bars are colored according to if the bulls or bears won. If you're brand new to trading, that might not make sense, but it'll be important when you understand it. And also, if you haven't seen my first video over learning to day trade, go ahead and watch that. Alright, so now let's set up our charts for actual day trading, and they look a little different than just this basic setup. If you go over to Flex Grid, click on it, your software should look something like this. What we're going to do, it's not going to make sense while we're doing it, but just follow along with me. We're going to hit the right buttons on each one of these to get rid of them. So now we just have this. And if I can remember how to do this, it's been a while. Go ahead and hit the middle button, which splits it this way. Then on the left one, hit the left button that splits it top to bottom. We're going to go ahead and slide this over a little bit. Go ahead and split the top one again, and then split the bottom one again. And we're going to slide this over and then slide this bar down. Go ahead and go up to Customize Grid, this little 6 or 9 square button right here. Turn off Customize Grid. Okay, then go up to the top left corner and click the symbol link button. Go to red, go over to the next one, red, go over to the far right one, red, these bottom two, red, and this one, red. Now, if you go over to the scanner side here on the left side where it says indexes or whatever it has there next to the watch list, go to public percent change gainers. Just scroll this up. It doesn't really matter what your stock says. Just click on the first one, and then right here click symbol link red. You've now attached your scanner to your charts, so anything you click over here will pop up on your chart. Now, this looks a little confusing, but bear with me in a second. Go ahead and go down to this bottom right one, the small one, and click off the C. Then click L2. This is level 2, and it's a very important thing to learn for day trading. I'm not going to get into it in this video. It's very complicated. I've spent probably 5 to 10 hours watching videos over level 2. Just take the time to learn it. It's very important. It will allow you to see stuff happening in real time versus just watching a 1-minute chart, which is you're just watching a bar go up and down. Level 2 is way more accurate for like very important quick decisions. Next up, go over to the far right chart and click off the chart button, and then go to active trade. No, not active trade. Just click that off. Time and sales. This is also considered level 2. They call it level 2, but it's actually time and sales. And this is all the active trades that are happening on this stock right now. And it actually, when they're green, that's people buying and the buyers are winning. The bullish is going up. And then red is where the bears are taking over and going down. And this stock is actually spiking right now. It just jumped in. It's been climbing all day. This is the 1-minute chart here. You can see the time button, date, 1 minute, 1 day. And then let's go ahead and set this to 5 minute, 5 days. This is how I typically have my charts set up. And then over here, you can go to 1 day, 1 minute. I prefer to have my 1 minute on the right side of my charts because I always watch the left side first. And I found that when I had 1 minute on the left side, I was very, very erratic with my trades. I wasn't like patient and letting it kind of play out. With watching the 5 minute, you're a little more, for me, I'm a little more relaxed with it. That's just how I prefer it. But down on the bottom, we can have the 1 year, 1 day. And this is a very important chart for day trading. This is probably the most important chart for day trading. Let me minimize my thing real quick so you can see all of it. This chart right here, when you're doing your scanning, your pre-market or your post-market scanning, or your momentum scanning, your intraday scanning, it doesn't matter what it is, this is the chart that you have to look at. This chart will tell you the previous history of stock that you're trying to trade. This particular stock, if we look at it right here, it's got a big spike up, and it doesn't really climb back down like most stocks do. What that means is it's already 2 o'clock now in the afternoon, but if we were up in the morning and we found this stock and we saw it and we were planning on trading it, we would look back at these days right here and see that, okay, this stock spikes up and it's pretty solid when it does spike up. It stays bullish. So this is probably a pretty good stock to trade depending on what the news is and everything. I have no idea what the stock is. I don't know why it's going up or what the news is. This is just a general explanation. And that's what ended up happening today. It spiked up and popped. This right here is the basic setup you will see for most day traders. You'll have a 5-minute chart, a 1-minute chart, and your daily chart. The daily chart is the most important because it will tell you the previous history of the stock, what it did back when it had news some other time. It will be very important for when you're doing post-market and pre-market scanning. Level 2s is also very important. This shows the who's bidding on what. Like right now, there's more buyers than, well, they just went away. But this is the buying side and this is the selling side, the bid and the ask. And that's the basics of charts. Now, let's get into a little more complicated stuff with charts. First off, studies. Now, a lot of people will argue all day about studies and whether they're important or not, or whether you should know them or not. My take is whenever I'm trying to learn anything, I want to know everything that there is about it. Like, even if I don't ever use it, I want to know what it is and how it works. I'm a manufacturing engineer. I come from a very mechanical background, so I tear apart an entire machine and understand it and then put it back together. That's just how I operate. If you're not like that, that's fine. You don't have to, but I find that it helps to understand everything you can about whatever it is you're learning. For stocks, I made a video called 14 different momentum or trading studies. You can find it in my playlists, or I'll have a link in the description. I recommend watching it and learning them all. Go to Investopedia and search each study and learn the mathematical equation that goes with it and understand how it works with trading. That doesn't mean you're ever going to use it or that you should use it. you've seen, I don't use studies much anymore, but they are important to know. It's important. It's especially important to know EMAs, estimated or exponential move averages, and VWAP. Not because they're accurate necessarily, but as you learn day trading, you'll find that the stock market is, especially for day trading, it's not so much for long-term investing, but for day trading, it's very much a popularity contest. When I first got into stocks, I had the picture, like when I hear the stock market, I think mathematics and equations and formulas and people sitting at their computer crunching numbers, and like a picture of the matrix comes up. But that's not really how it works at all for day trading, at least. That it is more the case for investment and long-term investing and stuff like that, but that's not what we're doing for day traders. It's very much finding the most popular stock or finding a semi-popular stock, watching the volume, seeing the history of it. Is it bullish or bearish? And then thinking about what everybody else is thinking about for the stock. That's where you get kind of 2 levels deep, or even 3 levels deep with the stock market. There's actually a really good book called The Market Mind Games, which is the psychology of the stock market, and it gets into what's called metacognition, and that's a kind of a subset of psychology, but it's the science of thinking about thinking. And that might sound weird or stupid, but it's true, especially for the stock market. You have to not only think about what you're going to trade and how you're going to trade, but you have to think about how everybody else is going to trade. You have to think about, okay, if there was 1,000 people sitting behind me looking at this chart, they saw the history of it being green over here, would they think that it's going to go bearish? And the answer is yes. Most people would probably consider this to be a very bearish stock. I mean, we have the 2 big red days here with the spike, but there's low volume on this one, but there's pretty high volume on this one. But for the most part, this is a stock that looks like it would be a solid bearish trade to go long on, and it did today. And it doesn't mean that it's going to always be like that. There's always a chance and a probability with trading, but that's what you have to think about. What everybody else is thinking about. I don't know. That was a long tangent. I don't even know what we were originally. Oh yeah, studies. Studies are the exact same. Let me show you a EMA, estimated move average. These are the most common ones. If you go to the edit studies here down on the daily chart, type in EMA, and actually no, it's not EMA, exponential move average. So EXP, move average exponential. Let's go ahead and click this 3 times and double click on the first one. 9 is fine for that one. Actually, let's change the style. Let's go ahead and do small dashes and pink. Doesn't really matter what the color is. Then go to the next one, change this 9 to a 20. Actually, no. Let's do 50 for the second one and make it a little bit bigger dash. And let's make the color gray, a light gray. Let's go back to the first one that was 9 and set it to 20, because for a daily chart that's a little more useful. And then the last one, go to 200. 200 is a very, very important EMA to learn and understand. Why? Because it's the one that most people look at for bounces and trades. For example, this stock, the 200 move average, if we zoom out, this blue line is very important. Let me zoom in here. Let's pretend we were trading on that day right there. I know it's kind of hard to see and it's small, but let's pretend that we were trading that day. If I slide this over a little bit, just so you can see the massive spike. Most stocks, when they have this kind of setup, when they're below their 200 move average, they will spike up to the 200 move average and then bounce. And that actually happened right there. You can see that the stock dropped down, it gapped down for whatever reason, bad news or something, but then it climbed back up and it climbed up. And it actually, you can see that it kind of bounced here at the 50 move average, the grayer dotted line. It bounced and then it popped up and then it kind of rebounds between the 200 and the 50. and then eventually it breaks below the 50 again, and then it comes down and it stays below, and it gaps down, and it this I'm not gonna really get into explaining it. With VWAP, you'll see this a lot where it'll bounce and come rebound back towards the middle of the VWAP. It's not always the case with EMAs, but it ends up doing that, and it bounces back up to the 50, and it kind of just rebounds here, and then it spikes and it clears way past the 200. This is a really important step, because if I don't know, but if I slide over one more bar, I'm going to guess that it's going to open probably pretty close to the blue line, the 200 move average. So what that means is it spiked up and it hit a high, but then it came down that day and it closed here. Then post market it fell. It probably fell. I don't know. We'll find out in a second. I'm going to guess that it fell to the 200 move average or very close to it. Then if you were trading that in the morning, you would watch it to find out, is it going to continue to climb and go back up to its high, or is it going to break the 200 and go south? Some stocks, it can be either or. Again, it's a probability thing, but these are things that you'll learn as you start trading more. So let's slide over here, and that's exactly what happened. It almost perfectly opened at the 200 move average. So anybody that was trading post-market or pre-market, they would have saw the stock drop that day, or like the last 5 minutes. It's hard to tell. I wish I could see the intraday so I could tell you more about it, but it ends up closing, and most people play off of the 200 move average. So the 200 is a very important move average to learn and understand, not because it's accurate. As I said it earlier, the stock market is very much a probability and a popularity contest. It's not. There's nothing mathematical really about day trading. There is, but it's not nearly as important as long-term investing. That's a totally different beast. But understanding and thinking about what everybody else is thinking and what everybody else is using is very important. This would become very important concept for you to learn if you ever wanted to do another market. If you ever wanted to learn like Forex. Forex is a totally different market. I don't know anything about Forex. I've never looked at it or traded it or anything, but I'm going to guess it has a totally different dynamic and a totally different kind of culture. If you want, culture would be a good word for trading. There's stock markets in South Korea. There's the British stock market. There's all kinds of different markets, and they all behave differently. They all kind of have their own culture to them. And understanding that helped me out tremendously. That book, Market Mind Games, there'll be a link in the description if you want to check it out. That book helped me out tremendously on understanding the psychology of the stock market, at least for day trading. If you're more of a long-term investor, ignore pretty much everything I just said. It's much more. It is still kind of a popularity contest with long-term investing, but it's much more than that. Now, if we keep scrolling over on the daily chart, it'll probably bounce back down to, well, actually the 50-day move average climbed above the 200, and then it bounces there. It comes down to a low and high. You can use these move averages, depending on the chart setup, to predict when to buy and sell out. So if you wanted to take, I don't like playing dip plays, but if you were to buy in low, thinking that the stock's going to move back up towards the move averages, you would set your sell limit around the 50 or the 20 move average. And in this case, right here, this is called a squeeze. It's like a ascending triangle kind of right here. Well, it's hard to see unless you slide over a little bit. So this is right here. When the move averages converge together, that's a really important day or a really important moment. A lot of traders will watch those days. They'll have a stock that they'll see multiple days or even weeks. They'll watch a stock because the move averages are converging, and when they do, they always split one way or the other. As long as there's volume. If there's no volume, they won't do anything. It'll just consolidate forever. But very popular stocks will start to pop when these happens, and the more you trade, the more you will the tickers kind of become people, really. That's a weird way to say it, but you'll get to understand certain tickers will do certain things, and they just have kind of a behavior on their own. And again, that goes back to the metacognition of thinking about what everybody else is thinking. Patterns repeat themselves, not necessarily because of like the universe is fractal in nature, even though it is, but because people just react the same way. They saw that this stock spiked, so it'll probably spike again like it did. And that's exactly what's happening right now with this stock. Okay, so that's enough of the psychology and concepts and the meta stuff of trading. Let's get more technical. So learn the move averages and also learn VWAP. VWAP, I sometimes use VWAP for intraday trading, but not a lot. Let's throw the VWAP on here and check it out. So VWAP is a little different from move averages. Actually, I like to switch my upper bands to like dots, and then I turn them gray because it's a little. I don't like lots of color on my charts. I like it to be clean. So this is VWAP, and the purple is purple is kind of like the move average of both, but VWAP is different from move averages because EMAs and SMAs, they're based off of the price, the open and the close usually. It's a calculation of the open and close. I can't remember the exact equation. You can find it on Investopedia if you look it up. But VWAP takes into account volume. It's volume weighted average potential or something like that. And it takes the high and the low or the close or something, and it combines it with the volume. And as you can see, the VWAP happening right now on the 5-minute chart, is opening up. And if you watch videos on VWAP studies, when they open together, it means something, and when they close together, it means something. Or if one's up and the bottom one's not, it means something. I personally don't usually trade a whole lot with it, but not to say it wouldn't be useful for a lot of people. Some people do use it. For the most part, again, you would look at, if you're a momentum trader, you would try to buy in when it's close to the VWAP and then sell when it's really high up on the VWAP. Like it's actually climbing back down right now, so this is obviously not a time you would want to buy. But a lot of people will play VWAPs as a bounce for the intraday. So if it you would, like right now, if I wanted to trade this, I would set my buy limit at like 440, and I would set my sell limit to like 430. So if it broke the VWAP, I would get out. Now I would lose a little bit, but it wouldn't be that big of a deal. But I would set my bounce or my buy to the bounce of the VWAP right here at 440. I would then put my sell limit at 470 or 480, somewhere around here where the VWAP is at. And actually, it would converge a little bit because it's coming down, but that's the gist of how the VWAP works. It's kind of like move averages. Use it if you want, learn it. It's useful to understand it because some people do use it, but that's the basics of studies. And there's tons of studies. Again, I have a video of like 14 different studies, and you can check them all out. They all work differently and do different things and have different calculations. All right, so that's it for studies. All right, now let's get into scanning. Scanning is a very important and crucial skill to have for finding stocks. If you go over to the scanner tab right here, click on it. This is the setup you'll see for scanners. Now we're going to set up a few scanners that I personally use, and then I'll talk to you about how I use them, and then we'll load them in over on the left side here where this is. Okay, so what we're going to do is start with a post-market scanner. This is a scan that you would do at the end of the day after market close, after 4 o'clock. And what we're looking for is the top gainers of the day. And in a minute, I'll explain to you why and what it means for the next day. So the first bar here, I'm going to set to last, and we're going to set it to 50 cents to $30. And what this is looking for is any stock between a close of 50 cents and $30. Last means the last closing price, and in this case it's daily, so the closing price for the day. Next, we're going to set the volume to 500,000. This looks for any stock that is traded over half a million in volume. This is really important to have a high volume number, because you don't want to find a stock that no one's looking at but moved a lot. It's not really useful. You need volume, you need liquidity in the stock to be able to get in and out of it. Then we're going to add a filter for the stock right here and do percent change down at the very bottom. We're going to set this to 4% or higher. And then what this is looking for is any stock that's moved at least 4% or higher. And then one more, add filter stock, and it's going to be shares. Shares are, you'll hear a lot of day traders talk about float, and float is the more important data point to understand, but ThinkorSwim does not allow you to scan for float, unfortunately. So we're stuck with shares. If you get one of the higher priced trading softwares or scanning softwares, you can sort by float, and that's a better option than shares. But what this is looking for is any stock lower than 700 or 75 million shares. So on the right side, type in 75 million. That's 750 million right there. So again, we have any stock between 50 cents and $30, volume of 500,000 or more. Percent change keeps change. What happened? Oh, I just have change here twice. Go ahead and delete that one. All right, so change 4% to max, and shares 0 to 75 million. If we hit scan, these are all the stocks that come up, and you can click percent change. This is the highest ones that have moved today. Mark is the one we were just looking at, is actually the second highest mover for the day. Let's go ahead, and if you click on the top right, show scan query, save scan query, and call this post-market gainers. Hit save. Go over here to the watch list on the side here where the scanners are. Go to personal, post-market gainers. You've now loaded the scan into your personal scan into these bars over here. And if you sort by net change, well, actually this is, let's go ahead and customize this right now, because this is not how I have mine set up. Click the little tiny gear icon right here next to the symbols in the high and the low. Customize, and just double click on low, high, take strength meter. I don't even use net change, turn off net change. Now on the left side, click on percent change. Volume is also a very important one. And shares. This is also an important one. Again, this is like, we don't have float, so we have to use shares. It's really useful to quickly be able to see what the stock's shares are. Oh, and then the last one is industry. As you learn tickers, you will, again, like I said, if the tickers are people, the industries and the sectors are kind of like the community. Industries are subsets of sectors, and I think there's 9 or 14 or 11 different sectors. I can't remember what it is, but there's a lot of different industries. The sectors are like healthcare, aeronautic, I can't even remember what they are. There's materials and all different kinds. So these will become important to learn for day trading as you start to learn the tickers. You'll start to see that right now healthcare and pharmaceuticals are a really hot, popular, very volatile sector or industry to trade in. You can make a lot of money in them, but you can also lose a lot of money in them. Sectors like finance and materials are a bit slower, less volatile, but they're important to start to learn and kind of understand as you trade. What I do is I have symbols, industry, percent change, and then shares right next to that. Go ahead and hit OK. Might have to slide this over a little bit and slide this over to the tickers, and then you can see the industries, the last price of the stock, and then this is the volume for the day and the total shares that are out. If we sort by volume, Mossy is the top traded stock. It's also the percent changer. Since this is a post-market scanner, I always sort by percent change. If I can click on it. And if we click on Mossy, this is the stock to the day. I'm going to turn off the VWAP because we don't really need it. I always have the 200 and the 50 and the 20-day move averages on my daily charts. It's very important and good to use. And as we can see right here, the stock, this is another very common chart setup where, again, they're all below the 200 move average, but then you get a little squeeze. If we zoom in here, you can see the 200 or the 50 and the 20 are coming up and converging on each other, and this looks like a news stock. It looks like something came out pre-market and just skyrocketed, but it bounced off the 200. It actually spiked a little bit above the 200-day move average up to the $2 psychological resistance line. Solid numbers and $half and $quarter are all psychological resistances, but 200 move average, this will probably close almost exactly on the 200-day move average. If it spikes back up, it might crash back down. But again, if you were trading this, and let's say this wasn't if it didn't spike up as much as it was, but it spiked up to, maybe it opened at $1.10, that's actually right where this one closed. But if it spiked up a little bit more than that, there's a good chance that you would set your buy price around $1.20 or $1.15 and your sell price at just below the 200-day move average, and you would make money that way. Or it wouldn't happen and just go reverse. But it probably, if it was good news, it wouldn't reverse below any of this stuff. You might get a squeeze down, but I don't see that happening a lot. All right, so the way I use this scanner is after the stock market closes, I look for the top gainers. Now, it's a very common percent chance win for what's called second day gap downs or second day drops. Let me see if I can find a stock to show it to you. This isn't actually a good one because this is not a stock that I would probably trade. This is a very good stock, Mark. So, like I said earlier, you have to look at the past history of the stock, and this spiked up and it stayed green, and it opened and bounced off the move average, which is a very common thing to happen. But this is very overextended. This is the highest it's ever been. It's the highest it's ever been in over a year. Let's do 3 years in a week. So, okay, it has been up to $5.50 back in the day. That was 2014. It's a long time. Let's go back to the 1 year. This stock would be a good chance that tomorrow, if it closes high, it might open tomorrow and squeeze out the shorts and go higher. There's a total possibility. Again, there's a chance, but a very common trade for short sellers is the second day red, where a stock is way overextended from its normal moves and it crashes down. Now, I would have to look at the news at this. Maybe they came out with like phase 3 clinical trials for the cure for cancer or something. That would be a very bullish news for it. And you'll learn the news. I'll talk about how to learn that stuff later on in the video. But for the most part, certain stocks that are way overextended, especially if they close like 100% up or 80% or 150% up, they usually crash back down red the next day. And if you're a short seller, searching for high of the days for today is a very good way to find a stock to trade for tomorrow. So if I was a short seller, I would use the high of the day scanner to find stocks with low float, good volume, and a high percent change, out of the normal percent change. So this is another stock, OSN. It usually has an average gap up and stuff. It'll climb for multiple days here. It gapped up a bit there. It climbed there and there and there. But these are all pretty small moves between, that's like 20 cents, 40 cents, something like that. But then today, for whatever reason, actually, this is again what I was saying earlier. When move averages converge, especially onto the 200 move average, you get explosive moves, and you can make a lot of money on these days. So if I made this video a couple days ago, and for whatever reason OSN popped up on my scanner, this would be a stock that I would watch. because as it happened, it busted north as soon as the move averages converged, and it's a float of, it's got 6 million shares total. I don't know what the float is. It might be even less. It's traded over 2 million almost today. This will be a very easy stock to trade, but well, it's already gapped down mostly for the day, so this was just a boom and bust. But if it had closed really high up here in like the $3, we can look back in the history and it's never done this. So there's a good chance that it's going to crash tomorrow. So if I was a short seller, I would look at this and be like, this is a good stock for me to trade tomorrow to short sell. That's what you would use the high of the day scanner for. Now, if you're not a short seller, it's still useful to use, because stock has a good chance of going red the next day. But if it does, it will usually bounce off of the 200 move average, like I showed here at Mark, which is exactly what, wait, no, not Mark. What was it? Yeah, it was Mark, way back here in July or June or something. It bounced up, broke the 200 move average, and then bounced again here. It actually closed. Now, the next day it could have gone red, but it would bounce at the 200. So even if you're not a short seller, high of the day scanners can be very useful for post market, because the way I use it, if I'm going to go long, is I'll find a stock today, I'll watch it tomorrow to see if it goes red. If it goes red, there's a good chance that it's going to bounce on the 200. If it does, I trade the third day for a long, and you can make a bit of profit that way. That's called a third day bounce. There's a few other patterns that you can learn. Sometimes they'll climb one day, they'll go red the next day, but they will close about exactly 50% of the first day green. And usually, if they close midway, it's either or. It depends on the past chart pattern. But a lot of times, if it's a strong stock, it will go back up the third day green, and you can play it long. Okay, so that's enough for the high of the day first day scanner. Now let's do low of the day post market scanner. Go back over to scans, and this is the exact same numbers, except we're going to change this to -500 and this to -4. What this is going to do is find any stock that has crashed 4% or more. Go ahead and go up to the top right corner, save scan query. Let me move that over because I just realized you can't see that. Post market losers. Save. This is the opposite of post market gainers, and the way you can use this is find a stock that has crashed for the day, and it might be a good play long the next day. Go ahead and go back to charts. Let me turn this default thing off. Move this down. Post market, go back to personal. Post market losers. Sort by percent change. NTPI is -35%. This is a massive gap down. This is some kind of bad news that came out for this stock, or it might be actually a squeeze onto the move averages coming down, but more than likely it's a news. Let's keep going down. Here, this is what I'm talking about. So this stock, CREG, the move averages squeezed onto each other. News probably came out because this has been consolidating forever, for the entire year. News came out for whatever reason. The stock spiked 4 days ago, which would have been last week. It came up to 680, and then it came back down and closed. But then pre-market, it gapped up. And we can actually see this on the 5-day, I think. Yeah, so this day right here is this bar. It spiked up, then it closed down here. But then it climbed pre-market. And it came back down and crashed, and it bounced. And then it opened and climbed even higher. Now it's coming back down, and today it's actually this resistance line right here. If we go over, oh yeah, I didn't show you drawing tools. If you go to here and drawing tools, you have all your different lines and graphs and stuff. I'm not going to get into what they are and how they work, but you can draw your line there. That's a resistance line. This tomorrow, if this closes and stays consolidating, or maybe it gaps up a little bit today, this would be a good play long for tomorrow. But if it goes below this, or it kind of just consolidates and it doesn't gap up, or there's no volume, it wouldn't be a good trade for tomorrow. But this is how you can use this scanner, the losers of the day, to find stocks like this. This is exactly what I look for. I also look for them closing down to the move averages. Let's see if we can find another one. Yeah, that one's too choppy for me. This one, I don't usually play ones like this, but this could be one. Again, we'd have another move average squeeze. It bounces up to the move average. It breaks the 200, but it comes back down, and then it gaps down again here. I would have to look up the news for this stock and see what it was that made it break, if it was news at all, or if it was just chart pattern. But a bounce here at the 130 or so might be a play. This one's a little iffy though, but that's how you use the losers of the day, is to find stocks like that. My favorite ones to find is the one that we were looking at a second ago. This type of chart setup, I really like. Let's talk about drawings and tools real quick, because that's what I didn't cover that in charts. If you go here to the chart settings and you go down to My Tools, on each chart, hit apply, you now have a toolbar. This is much quicker and much simpler than how I see most people do it, where they click on the drawing and they have to go down to drawing tools and they select what they want. With this, all you do is, if it comes up, you can hit the little gear icon and you can customize what you want. I have trend lines, delete, move average, add button. I have price level, and sometimes I use Fibonacci extensions or retracements. Hit done. You now have these toolbars, or they should pop up. They don't always. Sometimes it's buggy. But you can trend line. You can draw your trend lines. You can go back up. You can draw your price lines, your resistances and stuff like that. And you can even customize them. If you double click on, if you try to, I gotta get my, actually I'm missing one. Also add the pointer. Slide, pointer done. Okay, so pointer, if you double click on any of the things that you drew, you can customize the lines to whatever you want, hit OK, and then you can save them. And this is actually really useful on retracements like these. That's confusing, they're all red, but if you double click on them, you can individually change the colors to like a gradient, and then you can change the lines differences so that it's a little more clean and organized. But that's how drawings work. And they're very important, and you need to learn how to do trend lines and resistance and stuff. That's very basic day trading things. I'm not going to cover that in this video. There's tons of videos out there for that. Okay, all right, back to scanners. So post-market losers and gainers. Here's another really interesting thing. You can sit here and write down all the tickers for the ones you think that you're going to follow for the next day, and that works, but I'll show you a better way. If you go to here, and you can export the file, which will export the entire CVS and the stock and all the data that it has for the day. You can export it and save it as a Excel sheet, or you can go down to create watch list. Actually, no, you export them out first. I always just save them on my desktop for the end of the day. You can go back down to here and create watch list, import, select the file, off of your desktop, hit OK, and save as yesterday losers. Hit save. You always get an error. Now, if you go to personal, you have yesterday's losers, and I need to actually delete first one. Okay, so go to personal, yesterday losers. Now, this is a watch list, and the difference between a watch list and a scan, once you have a post-market scanner set up, you need to be able to look at them tomorrow, and that's where watch list comes in. Watch lists are different from scans as they're basically a notepad. You write down the ticker that you want and you will keep it forever and you can watch it. Whereas a scan is dynamic, it's active, it's constantly changing. It's going to only show what's currently set up for its parameters of whatever you told it to look for. Now you can have as many watch lists as you want. Some people organize by the patterns that they find. Some people organize if they're losers or winners. There's all kinds of different ways to do it. Just figure out the way that works best for you. I personally, I kind of keep them organized. I have like a master watch list, and then I have a watch list for like the past week. I look at yesterday losers and winners, and I add them to that list, and then I just go through them every day. And if they don't pan out or they don't do what I want them to do or think that they're going to do, I'll get rid of them and then re-update it every day. So that's watch lists. This video is getting pretty long, so let's just get through all these scanners. I actually have to get to work, so we're going to cut this short. I'm going to have a link in the description of all the scanners that I use. I'll explain to you what they are and how they work. There's a picture. You can just go look at the picture and type in all the configurations, and they all work pretty much the same. The two that I've showed you are post-market and pre-market scanners. The next one that I would use is when I wake up in the morning for pre-market scanning. I have a movers scanner, which is just called movers, and it looks for stocks 30 cents to $30 with a volume of at least 200,000. I change that volume actually dynamically depending on if I wake up. If I wake up at like 6 in the morning or 7 in the morning, I'll drop that 200,000 down to like 5,000 because there's just no stocks moving that early, or if there is, there's not a lot of volume. And then a share below 75 million. So that's looking for 75 million or below stocks, 30 cents to $30. And I change the volume during the pre-market morning just to find out what happens. And what I look for is I'll sort by volume, the top volume, and whichever stock is the top volume is usually the most popular, or it's got news out or something, and then you got to go to Seek Alpha or something to look up the news and figure out what's going on and so forth. And hopefully the stock, one of the stocks or the top 10 stocks that are the most popular volume-wise is one that you found in your post-market scanning the day before, whether you're doing short trading or long trading or whatever. The penny movers scanner is almost the exact same as the one I just explained, movers, but it looks for stocks from 1 cent to $5. So it's looking for really cheap penny stocks and also a share size of only 30 million, so it's way less. And this scanner is the scanner that I had a trade of 40% once on this scanner. That was a really nice trade, but I haven't been trading with a whole lot of money. It's stocks that are below $5 or $1. They act very differently than higher price stocks like $11 and up or $10 and up, but you can make a lot of money on them if the chart setups are correct and you know what you're doing. It's my penny stock scanner, and what I look for in that is the lowest float possible. We don't have float here, but I look for the lowest shares possible, and the lower the better, the more it will move. If you don't understand float or shares, you need to look it up some videos and understand it. Now the next two scanners are PreMarket Gap Up and PreMarket Gap Up Penny, which again, it's penny is just a smaller price size or a lower price size. But the what this stock looks for, or this scanner looks for, is a price between 30 cents and $30 and volume of over 10,000 with a share price of under 80 million. But there's one more study added to it, which is gap up with a current bar close of 4% or more below the previous close, and it's set for the day. Now, if you're paper trading, if you have a paper account, this scanner will not work. You can only add study filters to a live account. So sorry if you're using a paper account, this scanner won't work for you. It looks for any stock that is gapped down from yesterday's close at 4 p.m. below 4%. So if it's more than 4% down for the day or for the pre-market, it will pop up on this scanner. If you're a short trader, this is useful, and it's just nice to see it and compare to other scanners that you have. I don't use it a whole lot for losers, but the pre-market gap up is the exact same, but it looks for stocks that have gapped up 4% to currently I have that set to 4% below above the close for the day. And this looks for any stock that is gapped up. When I first started trading, I made this mistake of trading stocks that were very high volume. They were the most popular stocks in the day, but they had already gapped up like 50% or 100% or something. Starting out, don't ever trade a stock that has already gapped up 30% or more, or 50% or more. That's more for experienced traders that know what they're doing, because usually stocks that have gapped up that much will go red within the first 15 minutes of the day or 30 minutes of the day. Those are dangerous stocks to get into, and I lost the majority of my money I lost in the beginning was because I was playing those trades. Again, it can trick you too. You can look at your estimate or your move averages and think that, oh, it's going to go up. Just trust me. Starting out as a newbie, there's a 90% chance that you're going to blow up your account. I think that's the average for day trading. 90% of people blow up their account. So when I started trading, my goal wasn't to be super successful and make a ton of money. It was to not blow up my account, because statistically, I'm going to. It's just math. It's what's going to happen. It's statistics. And I don't know what the average is for the second account. I think it's like 50% or maybe less than that. People still blow up their second account. So the odds are stacked up against you starting out as a new trader. You don't know what you're doing. I'll tell you what to do at the end of this video on brand new people and how you can learn the stock market real quickly. All right, so next up, the pre-market gap up penny is the exact same as the gap up. It's just a lower float or a lower share size and a lower price. It looks for stocks between 2 cents and $7 and a float or shares of under 30 million. And then pre-market movers is pretty much the same as movers, but it's a lower price. Usually it's 2 cents to $30, and it's a 5,000 volume or less with 75 million float. You don't depends on how you are. I personally have my movers set to always I think 500,000 or 200,000 volume for the day, but then I have the pre-market movers, which is the exact same scan, but I'll change the volume throughout the day if I wake up early or if I wake up late. So that's all the scanners. That's how they work. Again, this is just a basic video of ThinkorSwim to get you set up and scanning for stocks. It doesn't mean you're going to be good or you're going to find stocks that are going to make you money. For my tips, now there is also momentum scanners, which I haven't really been using momentum scanners a whole lot. You can set up scanners for momentum, but I find it doesn't work too well with ThinkorSwim. The paid softwares that you can get for scanners is much better, and they work fantastic. They're designed to be day trading scanner software, whereas ThinkorSwim is actually just like an investment of medium to long-term software that day traders also use because it's free to use. My tips for moving forward, if you're brand new to trading, watch as many videos as you can. Learn, like I said earlier, learn as much as you can about everything, even if you're never going to use it, because you will just get a better understanding of how it all works. I've already read like 3 or 4 books on the stock market, and I've read a couple others on psychology because the stock market is basically psychology. It is understanding how people think very much. The first month of my trading, I was just watching and learning as much as I can, reading everything I could. And then I ended up subscribing to a trading chat room. And there's a bunch of different kinds of trading chat rooms. There's a bunch of different people doing them. I know Ricky from TechBuds. I don't think he has a paid chat room or anything. I don't think he live streams. He might now. I haven't been really watching him lately. I know Connor Portfolione, who's in TechBuds, just started his own chat room that he does live trading or something for. I don't know. I haven't watched it, but the chat room that I joined was about a month and a half to 2 months ago, and it's called Dekmar Trades. And I learned a lot from watching him every day. It is so valuable to be able to sit down in the morning and watch somebody trade real time and have them commentate on what's going on and what they're looking for. And then he also has a lot of videos in his video library that I pretty much watched half of them that I didn't know about. Or some other ones are Awesome Calls. I have a friend who goes to the same gym I do, and he has made some good money in Awesome Calls. I haven't been in it, but it's a very fast-paced news chat room, and you'll start to learn the different types of traders there are in the day. There's some guys that just are all about news, and they just look up the best news, and they're real fast-paced. It's real quick trading, and you have to really be on your feet for it. And then Dekmar he's a news trader, but he's also a little technical. He'll do chart setups, and he's got his basic watch lists. His chat room's a bit slower than Awesome Calls, but I don't know because I haven't been in Awesome Calls. It's also more expensive. I think Awesome Calls is like $160 a month, where Dekmar is $60 a month, so it's a good entry level for new traders. I don't know what Connor Portfolione's is. I think his is pretty cheap too right now. And then I actually just canceled my Dekmar trades. Not anything against Dekmar or anything. It's just his trading style isn't really for me. It doesn't jive with me, I guess is what I'm saying. I'm looking to join Tim Sykes's chat room and trading in Profitly, which is like $160 a month. But the benefit of joining his is, one, he's been doing it for 20 years, and two, he has the software or the website Profitly, which, if you've watched any of my other videos, I talk about guys like Tim Gertani and Steve Ducks and Steve Good, or I can't remember. There's a couple really big traders that are all students of Tim Sykes, and they've made all over. I think Steve Ducks was $900,000 or $950,000 in 10 months or 11 months. Tim Gertani is $4.2 million in 4 years or something like that. And the benefit of joining Tim Sykes is you get to see all of those guys' trades. When they trade, it posts on Profitly, and you can see where they entered or when they exited, and that is immensely valuable. I don't know what Tim Sykes' live trading is like, or I don't even know if he has live trading, but he also has a massive video library of how to find stocks and scanners and all that, and how he does his post-market stuff, and going through SEC files and all. It's very much more technical and like research based versus news trading. So I think that'll just fit better for me. It depends on who you are. I'm the type of person that, again, I'm a mechanical engineer. I tear things apart and want to understand everything that there is about them. So that fits my personality better. And lastly, I will tell you the crucial thing to be aware of when you join a chat room. A lot of new traders will get lazy and just start going off of the plays, the calls that the trader makes. Like if you were in Dekmar Trades and he releases his morning newsletter of the stocks that he's watching, some people will just log in, look at the stocks that he sent, and then go play them. That's not what you want to do, because one, Dekmar has sat there for probably hours looking at these stocks and figuring out and studying them and going through the news and understanding everything he can about that one stock for that one day. Whereas if you're waking up at 9 o'clock in the morning and you don't get your computer running until 9:15 and you look at the stocks, you don't know anything about the stock, you don't know the news, you don't know what's going on, you are just purely following what a professional trader is doing, and that's a recipe for disaster. You might get lucky for a month or two, but you will end up blowing up your account because you're not learning anything, you're not pushing yourself, you're not expanding your knowledge of how everything works. you're just kind of following it. That you don't want to fall into that trap. You want to focus on what I did when I joined chat rooms and when I joined Tim Sykes' chat room. I'm going to be looking at how does he find his stocks? What does he look for? What is his entries and exits? Like, why does he think the way that he does? Why does he look at this stock versus this stock? And I would do my own scanning. I would do my own post-market and pre-market scanning, and then I would join the chat room and compare my notes and be like, okay, he's looking at this stock. I looked at that stock too. I predicted it's going to do this. Well, he predicted something a little different. Why? And then what happens? And by having your own method and having your own process, you can then compare it to somebody else to see if it's a better trader than you, to see if where your flaws are. You'll start learning where you're making your mistakes and how to improve. That's how you should treat chat rooms. You should not treat them as a quick way to make money and cash and just follow the professional traders, because one thing, they might stop streaming. They might just close down they might be done with their teaching and whatever, and they just do their own thing, and then you're left in the dust. You haven't learned anything. You were just following them, and now you have to go find a new chat room and learn a whole new process, a whole new person, and it's better not to fall into that trap. So, so my trading. I've been trading with Stock Trade for the past 2 months or so, or 3 months. I got rid of Robinhood. I'm not going to recommend Robinhood to anyone. It's just the execution's terrible and it's not worth it. I got stuck in a trade a few times with Robinhood. Stock Trade, on the other hand, it's $1 a month and then $1 per trade. It's a fantastic software for anybody brand new to trading that wants to learn. I would recommend, I see so many people throwing in like $10,000, $20,000 into their account, and then their first week they blow up $5,000 and they're freaking out and they jump on some Facebook group and like, what do I do? Don't be that person. Don't do that. 90% of people blow up their account. You are statistically going to fail at trading starting out. You're not going to be good at it. It's like anything. It's going to take time and experience to get good at. What you should focus on instead of the dollars and the money is the percent. The percent that you make. If you make 40% on $15 trade, that's still 40% no matter what. So if you can repeat that 40% when you have $10,000 in your account, you've just made $4,000. So if you're a new trader, don't focus on the dollar signs. That's not important. What is important is getting good methods down and getting, if in physical fitness and working out, there's something called muscle memory and reflexive memory, and this is very important for like professional athletes, but also if you're a weightlifter, form is talked about all the time. Form is extremely important, but what that is you're writing the neurons in your brain to do something a certain way. And without getting into a neurology lesson, it's very important whenever you start something new that you've never done before that you do it correctly form-wise before you do it a long time. Because if you have a gambling mentality, if you come from, maybe you're a poker player or something, or you spend a lot of time at the casino and you come into the stock market and you want to be a day trader, you're going to bring habits in from that environment that's going to be very bad for you in day trading. Or maybe you're somebody who's like really hot-headed, or your emotions control you a lot. That's going to be bad for you if you're a day trader. You have to be like a robot when you're trading. So again, it's very important that you build the correct habits from the beginning. And in order to do that, you need to study as much as you can and learn as much as you can and watch as many different traders as you can to see what they do and also see what they don't do and see what they failed at. Tim Gutierrez is a guy that you really should study because he comes from a gambler's background. He has a gambler's mentality a lot of times, and he has made negative $200,000 trades multiple times. He's probably lost $1 million or so in the stock market. He's still positive, but the trades that he lost in were because of mentalities and things that he brought from his poker days. And you have to be aware of those things. You have to be aware of your pitfalls and prevent yourself from falling into them at the very beginning, because the longer you go into your trading career, with these bad habits or whatever they are, the more they'll get ingrained into you and the harder it will be to get away. It's just like working out at the gym. If you have bad form, I think, what is it? It's if you have to write something into muscle memory, you have to do it like 4,000 times or 2,000 times, something like that. It depends on what it is to get it right. But if you fuck it up and you have bad form and you did it 2,000 or 4,000 times, it will take you 10,000 to 15,000 times to sit there consciously and recorrect the motion before you'll get it correctly, or before you'll have it in your muscle memory correctly and not have to think about it every single time you do it. And that's not a place you want to be in the stock market. And it's the exact same mechanisms in the brain that influence that. Whether you're talking about sports or trading, it's still, I can't even remember what it's called, but it's a white chemical that wraps itself around your neurons. This is actually how addiction works. When you smoke, you get a dopamine kick, and there's a white chemical that wraps itself around the neurons that are connected to smoking. And when the first time you take a cigarette puff, or do anything, it doesn't matter what it is, the signal speed is like 2 miles an hour. When you get to professional level of athletes, like professional baseball players or MMA fighters, they actually measure the signal speed of their reactions and stuff and what they do. That's all muscle memory. It's up to 200 miles an hour, and it's the exact same for smokers or addicts. When you do something enough, your brain amplifies it and will ingrain it into your mind, and it's very hard to rewrite them. That's why drug addicts, they can never have drugs or alcohol again, because even though they haven't done it in years, that neuron, that synapses and everything that's written is still there, and it can still be turned back on in an instant. And as a day trader, be aware of this stuff, because if you form bad habits in the beginning, they will stay with you for a very long time, and it will be even harder for you to get over them. So that was a long spiel. I don't know. Tell me what you guys like on these videos. Do you like the technical side of me explaining how the software works, or do you like the, talking about the psychology and all the, meta stuff that's behind it? All right, I gotta get to work. Hope you guys enjoyed this video. If you have questions for me, send them to me on Instagram. Link in the description. It's the social media that I'm the most active in. I know lots of people have been asking me questions, but I just don't have time to answer everything on Facebook and Instagram and YouTube, and some people email me, and I don't have time for it. Just send it to me on Instagram. Thanks. Have a good one.